Hello and welcome to another episode of FinTech Focus TV with me, Toby. I am absolutely delighted to have over from the USA today, Greg from Adroit Trading Technologies. How are you?
Great, good to see you.
Listen, lovely. Thanks so much for coming in. I've been looking forward to this one. We sort of had a near miss a couple of months ago. You're here now in person and it's lovely to have you over. So loads to crack into today. Some of my favourite subjects that we're going to be talking about, the world of OMSs, buy and build, buy or build, everything else alongside that. Got to learn a lot more about your business recently. Looks fantastic. Going to dive into all of that. But before we start, tell us a little bit about yourself, Greg, and the company.
Yeah. Well, thanks again for having me. I'm Greg. I lead business development at Adroit. We've been around as a company since 2014. Our founder, Anil Jaglan, was the architect at Bridgewater before starting us. We are a buy-side focused EOMS. So you can look at us as an EMS with shoulders. You know, our job is to handle everything for the buy side that's trading or trading adjacent. And our focus really is on OTC products. So, non-listed stuff, bonds, loans, OTC derivatives, FX, and the like.
Fantastic. And you mentioned there that sort of OEMS. We've seen a lot of movement in that sort of space, and this buy side I'm really encouraged about, because you mentioned 2014 as where you started. I think that sort of 2014 to today, this last 10 years sort of period or so, has probably seen the sort of biggest evolution in buy side technology, where back then the buy side was sort of a reluctant dragger of tech into it all, and now it feels like there's a real hotbed of opportunity. A lot of it around the sort of OMS, EMS sort of space. And when we were talking beforehand, you talked about OMSs as EMSs. Yeah. Tell us expand on that theory a little bit.
Yeah, I mean, I think you can kind of break the world up into what PMs need and what traders need.
Yeah.
And we've seen plenty of dominant OMSs. We all know the big names that are out there, and we've seen some attempts of those guys going into the EMS space. And I think there have been some challenges. That kind of joke that they've been almost ready for a decade. And I think OMSs are really well built as for tools for PMs, for operations managers, handling things like portfolio compliance, some order capture, risk management, and that kind of thing, and lots of post-trade processes, and they're great at that for the most part. Where there seems to be a gap is with traders. And when we started the company in 14, we weren't sure what we wanted to be. Let's be everything. And we really kind of narrowed the focus because we saw that there was such a need for traders to have a tool. We've seen EMSs out there forever. So everybody has an OMS as a long-only asset manager, and every long-only asset manager and most hedge fund managers have EMSs for the listed markets. There's a real dearth of tools out there, certainly for OTC and certainly for traders. So we've seen OMSs kind of try to nudge into the EMS space, and it's they'll do the trick for guys that are trading fixed income or derivatives as a hobby.
Yeah.
But it's a pretty soft attempt.
Yeah, it's interesting that, isn't it? Because as you say, going back to where you start off there, saying, look, we're sort of the everything store back when you start off. What was the catalyst for you to say, right, that's where we'll narrow down a little bit more? Was it just iteratively, improving and looking and seeing and seeing what works and what doesn't work, or where the need is? What was
Yeah, it's where is the pain?
Yeah.
Is kind of how we looked at it. I think everybody has an OMS, and you're not going to go and displace an incumbent as a startup.
Yeah.
And so we saw some,
which is what everyone assumes, doesn't it? They sort of go into these grandiose ideas of saying, look, we're here at a startup, we've got something better.
Yeah.
Something better doesn't necessarily mean you can get rid of legacy tech. It's an interesting.
Three guys in a garage, you're not going to go and supplant Charles River.
Yeah. Well, Charles River got there somehow.
Yeah, that's right.
There was those sort of I guess mid 2000s OMS wars, wasn't it, with those original sort of plays, and I think now it's sort of fragmented into a much more level playing field for businesses to sort of come into it, right?
Yeah, I mean, you've got to do a lot of things. I mean, if you're going to be a credible player in a space, you've got to be darn good at it.
Yeah.
And it takes a lot of work to get there, and it takes a lot of expertise and experience.
Yeah.
So Anil dealt with this, and he implemented OMSs at his former employers.
Yeah.
And kind of built a bunch of trading technology around it, and saw where there were weaknesses, saw that the limitations of OMSs that were out there, and it's like, shoot, we can do better than this.
Yeah.
And so he built it at 2 different places and said, well, let's monetize this. Let's kind of have this as a product.
I think that's so important, isn't it? That sort of ability to actually feel the pain and then deliver the solution to it, do something better. Is exactly how I love it. Now, you also mentioned there the sort of specialisation and honing down. And I think we've seen appetites, as you say, for there are a number of good vendors out there who are all things to all people still, and do various different things in various different asset classes. And if you're looking at the appetite in your customer base at the moment for singular asset tools, etc., what's that look like for you at the moment?
Yeah, I think clients generally are going to take 2, maybe 3 EMSs out there. So, as I mentioned, everybody's already got one for listed, futures and equities. Like, okay, that's a very mature market. It's been out there forever. You may see someone taking something for FX specifically, but they're not going to take one for every single fixed income asset class. Fixed income is not an asset class. I mean, there are market microstructures all over the place, whether you're trading a corporate bond, a municipal bond, mortgage.
It does often feel like a catch-all, doesn't it?
Yeah, that's cheating. You can't. It takes a lot of work, a lot of experience, and you've got to know the detail, because a credit, a CDS tranche is not going to trade the same way as an FX forward. Yeah. Right. So you've got to be able to kind of handle all of these things. So, we've seen sort of lots of fixed income EMSs out there and kind of trying to get into the business. But what people I think make the mistake of is, a fixed income EMS is not the same thing as a corporate bond e-trading EMS. Yeah. And that's sort of the kind of tick the box kind of thing. You can't just tick the box. Yeah. And I think there's very little appetite unless you're a highly, highly specialized, corporate bond e-trading firm. Yeah. Pretty limited appetite to have it's kind of a one-trick pony. Yeah,
I think that's absolutely right, and I see a much more fragmented space right now, and there's obviously people there who are trying to build this patchwork of technology to come and fix their solutions. But I think there's a lot to be said of saying, right, let's go in and specialise and make sure we've got the right things in the right space for all people at the same sort of time, isn't it?
Yeah, we certainly want to stay in our lane. We don't want to be an OMS. We don't want to be a portfolio and risk management system. We want to be the best EMS that's out there. And we're going really, really deep. And going deep includes going across different asset classes and being able to play nice with all of the technology that's out there, including OMSs. We have clients that are on basically all of the big OMSs, and it's our job to make sure that it's a seamless experience and not playing favorites. Look, I think the OMSs for the most part often recognize that they do have gaps and that we do play a part. For example, are Charles River's only certified EMS partner. It took 2 years to get there and do it, but I think we do, fill some important gaps for sophisticated, fixed income and derivatives players that need something more than just the basics that an OMS might provide.
I think that's such an encouraging thing for this industry. I mean, I know that I've said it before on the show that the role of partnerships has become a really important role within this sort of space, and I see that this collaboration, the interoperability, whichever way you want to call it, has become better and better to provide the solution that people need from, if you think about our digital, the way we work things digitally and all this sort of stuff in our day-to-day lives, it's all about making sure we've got the best possible solutions to what we're doing. And I think to have that encouragement to say, look, Charles River recognised that with you for example, is really encouraging. You mentioned and sort of alluded to this beforehand, and we were speaking off camera before, that it's been a really interesting year. We're filming this now in December 25. It'll come out early 2026. If I'm to characterise 2025, I feel like the market has really sort of started to invest again into trading technology. I think it was a sort of, after a booming 2022 and 2021, maybe 2020 for certain companies, 23 and 24 was people were interested, but buying was taking forever, decisions were being put off, etc., etc. Those decisions need to be made. People are looking for efficiencies, people are looking for productivity, people are looking for it to reduce friction, and they've invested this year.
Yeah.
But those processes have taken a lot more due diligence. Those processes have taken longer and frustrated salespeople all over the world and every single company. But if you're looking at, I guess, drivers for people who've bought this year, what are your customers saying to you?
Yeah, well, I'll back you up on your thoughts there. We have seen a blockbuster year.
Yeah, fantastic.
From February until today, we've literally doubled our client base.
Congratulations.
Of new logos. It's been an amazing year, and I think there's a little bit of FOMO that's out there, and they see that. I think we've probably reached a bit of a tipping point. It's sort of 20-ish% of people buy.
Yeah.
Everybody else kind of like, what am I missing?
Yeah, yeah.
So why are people buying now? I think there's obviously a bunch of reasons. I think the multi-asset thing is a big one, and why they've bought us in particular. That seems to be a driver. Being able to do things across not only assets but across accounts. So long-only asset managers who have got some time of trade compliance needs and minimum denomination requirements, and being able to do allocations and kind of work closely and take advantage of opportunities in given accounts where they may. So multi-account is a big thing for us. A big driver too has been API trading abilities. So we've seen lots of need for automation and systematic trading, where simply clicking around on a UI is not going to be enough. So we've always had a very strong API framework going out to the different liquidity providers and venues. But we've really invested a lot also now into the client-facing APIs that allow them to even operate Adroit headlessly. So they have their algos talking to the street's algos, and we're just kind of the traffic cop in between. There's always a need for some sort of a hybrid solution, even for the most sophisticated and the most algo-driven people, to have the comfort of having a screen that they can look at. And there's always going to be a mix of people who like clicking around and a lot of people who like doing things completely headlessly. But that's been a big driver of our business lately too.
I think that's a really important thing you mentioned there. That there are people who like to do it like this, and there are people that like to do it like that. I think the best firms recognise that whilst you have processes and structure to making a successful, replicable business, it's also you've got to look at the individual, that PM or that trader, and work out what's going to make them successful. How do they want to feel and fit and do that sort of stuff around it? Yeah, that flexibility is important, right? Yeah,
I mean, some PMs, for example, or traders have discretion, and that's been a challenge for a lot of firms. Like the traditional, again, OMS framework has been. PM comes up with an order, dumps it onto a trader executes that very specific trade. Yeah. But to the extent that trader has any kind of discretion, that's something that you need to have that optionality to be able to say, okay, I want to shape this order this way, or I want to trade something that looks like that but not exactly that, or I want to trade a different strike of this option. And likewise, I think some traders are heavily voice focused. And I mentioned, a fixed income EMS is not a corporate bond E-Trade EMS. So much of the fixed income market, if there is a market, trades voice. Your high yield is probably 75% voice. Asset backs are 100% voice. Yeah. You have to have a way of digitizing and making efficient that workflow. Yeah. So some traders are going to be more voice focused, some are going to be clickers, and some are going to be completely automated.
Yeah. Yeah. No, it's exactly right, and making sure you've got the solutions to fit that sort of thing and the flexibility to fit that. To double your logos over the course of a year is phenomenal. That must be a great feeling for the year. The team must be absolutely buzzing.
It's a fun time to be at Adroit. When we run pretty lean. We have literally one salesperson, and you're talking to him. So the whole company is focused on what we're just talking about here. So we're not distracted by going out to the sell side or an analytics business, data business. This is what we do. And I think that's really started to pay off. So we're very, very heavy on devs. We've, in the last year and a half, we've doubled our staff. And in the last year, we've doubled our integration team to handle all of this growth.
Yeah, fantastic. And we mentioned this at the start as well, where we talked about buy and build. Before off camera, I sort of saw you sort of give a knowing nod when I was at a conference a couple of months ago, the Buy and Build conference, and that was the sole topic. So to think that there was a buy and build conference solely, a day's agenda with people talking about that sort of space just shows how far that's come. And if I think back a few years, it was very much buy or build, and it was in-house teams saying, right, we can do this sort of stuff, we can share it. Now it was very much around let's bring in the specialists, let's adapt to that sort of stuff, and it's moved to let's adapt it to what we're doing and bring it into that whole place. So my view. The rhetoric certainly from that event was very much we're in the buy and build era, or buy to build era.
Yep.
It could also be said. Tell us a little bit about where Adroit sit in that debate.
Yeah, we've certainly seen that, and I talked before about our API capabilities, and that is really what supports that. So to the extent that a client wants to have, and we've certainly seen this more on the levered side than on the long only, but we've certainly seen a couple examples in the long only as well. If they want to have their own front end, because they do have specific needs, and a vendor, I don't care how good of a vendor you are not going to be able to handle everything that you want in exactly the way. So, many have built their own front ends. It's our job to go and handle the plumbing to make that system sing louder.
Yeah.
So
what way of putting it.
Right. So getting all the right data, being able to normalize that data, putting it into a way that that can be easily digested by their chosen front end is a big part of what clients are looking for. And that's something, again, there's no fixed income market. They may have a system that's in-house that works really well for corporates, but nothing for munis or OTC derivatives. Great. Take the APIs for this, use our UI for this. I don't care. I'm completely agnostic, UI versus GUI, UI versus API, and plenty are doing some element of that build.
Stitching it all together, absolutely. And one of the things we mentioned there, look, you talked about it being a booming year, specifically for your business, but I think across the industry we've seen a much better year. I anticipate that moving further forward in the same sort of way as well. That said, there's an awful lot of headwinds economically, politically, all across the globe, right? So everyone's been in that. We're kind of used to it now. It's not gone away. It's not going away particularly quickly. So we live in this sort of period of volatility, and I think the adaptation of the market to that has been really important. Alongside this sort of generational collision of technology that's happening at the same sort of time, be it from cloud, which seems so old hat now, but very much part of the revolution, alongside AI and everything else in between it. So there's this generational technology play alongside a lot of volatility, which puts pressure on businesses in terms of economics and how they invest and where they invest. They are investing at the moment, and that investment is about, in my opinion, habits which need to be, or decisions that need to be made in the business. That's either increasing the productivity, improving efficiency, reducing cost, improving friction, improving customer experience. Those are the general sort of buckets that I see into it. But if you're looking at the sort of cost analysis that buyers are putting into it at the moment, and they're thinking about, and they are thinking frugally, they are. It's not frivolous investment, it's investment with thought behind it. What does cost analysis for buyers mean to you?
Yeah, I mean, it's always fun to make a prediction going out. Like, we're here in December, we'll see when this airs. Like, I'm not making any predictions.
Exactly.
I guess the cost analysis, we got to look at this as a self-funding endeavor, and I think our clients have kind of come around to kind of seeing things that way. I guess you can look at things in three buckets. So there is the cost of the bottom line, there's opportunity cost, and there's transaction cost saving. So bottom line, what's the total cost of ownership? So you have an OMS that's kind of trying to force itself to be an EMS. That's expensive. So it's your bodies, and you're paying for professional services to try to make that change. And, so depending on the firm, that could be 50% of a vendor's revenue. That's trying to be something that they're not. So that's a hard expense internally and externally of outgoing dollars. I think you look also at the sort of the risk and operations that's attached to kind of forcing things and maintaining that as well. I think that's a really big cost to the bottom line. In terms of opportunity cost, being able to open up new protocols, having a system that's able to do like weird things like FX options, where you haven't been able to trade these instruments. I think it opens up opportunities that way. But I think the biggest opportunity driver is in reaction time and speed to be able to respond to an incoming opportunity that's out there. Like, okay, dealer has a new axe in this bond. I want to be able to see that immediately and have it be relevant to me, and then be able to take action on that. And whether that's by being able to see something immediately of what I care about, to be able to click on it and to be able to execute that, or to be able to have a system just automatically do that via an API. Opportunity cost is a big one. And then from a transaction cost standpoint, I think this is something that, having one pane of glass that's going to open up the entire market allows you to look at multiple venues and direct dealer pipes and all of those different protocols, and making all of those venues kind of come to light, and you can use all the capabilities that are available to you without having to go and log on to 15 different systems. That is one of the ways where you're going to be able to save on each transaction, by being able to find the cheapest way to put on that risk. And I mentioned before, the ability to shape orders to, kind of, I want to split this, I want to do this as a fly or a curve, I want to do this as an outright, I want to hedge this, I don't want to hedge this. I think those are the three drivers. I think that I would put them in buckets.
Yeah, no, absolutely echo what I've been seeing and hearing all year around this sort of thing, and it's really interesting to see that evolve, isn't it? You mentioned in that you're not going to make any predictions, so I'm not going to ask you to it. I think it's really interesting to look forward and think about what we're going to see. But if there's one thing that the last few years has taught us, is expect the unexpected is probably the prediction. But I think we've got very good at adapting to that and managing that. And everyone sort of says, look, change is the constant. Let's get on and pivot and adapt and iterate to make sure we're adapting to those market forces that come through for us at whatever sort of stage. And we know that within that, people are still going to invest and look for everything that you've just spoken about in terms of their buying decisions, whatever their headwinds. But what I do want to sort of talk about is, whilst not predictions, is what do you think your customers, if they're out there at the moment thinking about 2026, thinking about the year ahead, thinking about how they can, generate alpha, get their advantage in the marketplace through technology. What are some of the 2 or 3 things that you think this is absolutely should be on your radar, and what you should be thinking about to become as efficient and productive as possible?
Yeah, I think kind of picking your head up and realizing that there is technology out there that can pull together a lot of things. I think vendors, platforms have a really hard time of getting people's attention, because there are incumbents that are out there, and it's going to be hard to be the 14th different venue in order to get somebody's attention. Kind of picking your head up and realizing that there is a way that you can access these things without having to log in.
Yeah.
So I'd say one would be that. I think there is the whole automation topic has been done to death. You go to the conferences, and that's really what all people want to talk about.
I think it's been a fair theme of fintech-focused TV this year.
Yeah. And look, it is a thing.
Yeah,
I think people are always being asked to do more with less.
Yeah.
And there are enough tools that are out there. There's enough liquidity that's out there where you can actually start to do more automation. There is a point where it stops becoming effective and productive to do that, and you're always going to have to go back to the tried and true, clicking around or picking up the phone. But yeah, I mean, having the right technology that will be able to support automation, I think that's these days that's table stakes for any kind of trading solution.
Yeah, I think it's really interesting. I was having this conversation last night actually with someone, and at some sort of stage, whether you call it a bubble bursting or a correction, there will be something that happens, a shift in the marketplace around the valuation of AI within the space. But what effectively it is, if I go back to the dot-com bubble. The dot-com bubble was just recognizing that there is technology within this space. And it's needed, and it didn't change the world in terms of where it was. It just changed valuations for a period, and we had a ripple off the back of it for however long. But we've been there, we've seen that sort of thing, we've echoed that's the play. AI fundamentally, automation, whichever way you want to look at putting, meshing both of those together, effectively just allows us to do a lot more and be more intelligent with how we're building our businesses and all that sort of stuff, and that doesn't go away. Right. It's just how people actually learn about how they're utilising that on a day-to-day basis. I think the last couple of years have been very much we want to be AI, we want to be driven by AI, we want to do this sort of stuff, but what does that actually mean, and what are you actually looking at to do? And I think there's been a real maturity in the marketplace about working out what that actually feels and looks like.
Yeah.
And so that would be something that I think is there actually, in 2026, is what are people thinking about they actually want that to do, rather than being looking left and right, rabbit in the headlights. I need to be doing this to keep up with the Joneses, as you've spoken about beforehand, right?
Yeah, I think AI, there's a huge place. Obviously, there's for AI. I mean, there's so much spend that's happening, and it's a lot of talk for sure, and a lot of it is justified. I think, maybe I'm a Luddite on this, but I think that portfolio managers, operations, customer service, huge value in AI, and there's a huge application right now for it. As a trader, there's a bit less. So I think people will confuse or conflate AI and LLM with rules. Like, these are trades. You can't mess around and be like 99% accurate. It's got to be 100%
approximately
accurate.
right is not good enough, right?
Yeah. So these have to be settled, and they have to be down to the penny. You can't deal with approximations on this. So I think there is a little bit less, for now, I think, application of AI to the trading desk. Certainly more for data analysis and portfolio management.
Research, everything else around that. Absolutely, I totally agree. So and you've mentioned it before, a stellar year for you, a stellar year for the business. Logos flying in left, right and centre, doubling of businesses, absolutely fantastic. To do that again, it's like the clocks tick over in 2026, isn't it? And you'll start again. We've been in sales for a long time. How do you trump that? What's coming up for what's exciting about the business for the year ahead?
Yeah, no, we have a robust pipeline, and we've been fortunate to have a really strong roster of clients, and they're very often happy to speak with our other clients. And again, I think there's a little bit of FOMO, so we've seen more inbound calls in the last couple of months than we have in the last couple of years. So it's been fun that way. That's not to say you can't rest on your laurels, and we certainly aren't. We continue to hire devs, as you know. And I think we're going to be moving more and more onto new technology platforms for ourselves too. So tons of technology investments. We have a good dev pipeline.
That's some great people as well in your business, isn't there?
Yeah, we're pretty picky in terms of who we hire. We hire some great folks. But I think we will continue to hire on the integration and dev side. I'll have a couple of salespeople. I think we'll be expanding in Europe.
Share the burden.
Yeah, exactly. But we've been pretty focused in the U.S. and kind of doing quarterly trips to Europe, and that's not enough. So we'll be beefing up our staff
opportunity
here
as well, right?
Yeah, it's a big market, and it's a lot of the same needs.
Let's focus on that, because we're helping you with it at the moment. The guys have been reporting back. It's a great sell. It's a great company to be working with. I always think that's one of my favourite questions is why people choose a company over another company. So you're creating this opportunity. You've just spoken eloquently through it for the last half hour about the business and where it's going. So tell me for people who are looking for their next role, who are thinking about this sort of stuff, be it on the development side or on that BD side of things, and looking to build out Europe, as you say, why is this such a compelling offer when they'll have the best people who always have 2 or 3 options? Why are they going to choose Adroit?
I can tell you why I did.
It's always a great place to start.
I was at JP Morgan for about 21 years. It's a fantastic place. I'll have to
you miss the new office.
And the new one that's coming here.
Exactly.
It's an amazing place. It's a very big place. And so we feel like a startup, but we happen to have been around for 12 years. So it's definitely got a sort of a hungry, scrappy feel to it, and definitely see the fruits of your labor. And I had a bunch of different opportunities when I decided to look around. And Adroit, of all of the sort of technology providers that I looked at coming out, like really stood out by how client focused and how quick and responsive these guys are from Anil on down, and he sets the tone. So it's been a fun ride for the last 5 years here, and I don't see that changing. I think our clients are amongst the most sophisticated and demanding and smart out there in the OTC space, and they're going to keep pushing us, and we're going to keep responding.
Well, you can see it in the way you've spoken about it, the way your face looks as you're going through that as well. I always say it's a great sign, you know, when you're seeing someone talk about their business and have a beaming smile about what they're talking about and speaking with passion and energy. I love seeing that sort of stuff, and I think it's so important. I think there's a lot of companies who say, right, we want to hire, and haven't got that sort of ability to really articulate why. And when you're talking about sort of moving from such a great institution as JP Morgan, and seeing something again there which gives you that sort of buzz and that excitement and that drive, it's just great to see. So, Greg, listen, thanks so much for coming on the show and sharing the wisdom with us all. Lovely to meet you. Thanks for coming over. And thank you all for watching. We will see you soon on the next episode of FinTech Focus TV. Thanks a lot.